Hey, what's happening, guys? Dan Darrow here with another Options to Play video update. One of the questions I get asked a lot of times is like, when do you know when a trade should be rolled, or when do you know when to just like exit totally, right? Like, when do you know when to like stick with something and just keep like rolling up and rolling up and rolling up and sticking with it, or like when is like enough and like should be just like ringing the register and moving on, right? And I mean, there really is no definitive answer to that, right? Because like each setup is going to be different, each trade is going to be different. I mean, and sometimes you just don't know when something is going to be, totally exhausted and pull back, or when it just kind of keeps going and going and going. However, there are like kind of like a few signs that I look for, or maybe like a few different like developments that kind of play into it too. And it kind of helps me determine whether I want to roll or whether I want to just exit and move on. And well, one of those, so I'll just go through like a couple quickly. I mean, one of those is like the pace of the move, right? So meaning like the slope of the move, right? So like for like a stock like City, right? Like when you have like these trending patterns, the moves are very methodical. They're often slower. They're more predictable. They take longer to develop, but they also are more consistent, right? So when City breaks out of like consolidation, like it does in 75, right? Instead of seeing like a significant like one day like 5-10% breakout and rally, what you get is just like a slow, steady grind, very methodical ride and moving averages higher, right? So as it starts to move in your favor and say you want to like lock in some money, like this would be like a pattern to me where I feel like it's not extended, it's not overbought, right? It's not like crazy past a bunch of its major moving averages, right? So like this is something where I would probably want to stick with it and keep rolling, right? Because like the stock really hasn't gotten too extended. It hasn't ripped too far. I mean, like the volume hasn't started to accelerate. So it's in a very methodical, defined trend, and it seems a lot more steady and a lot more consistent, right? You compare that to like say like a Ford, right? Different chart, right? You had like a big breakout through 13, which was the previous high, and then it was like a fast run, right? Like a fast breakout, push up to 15. Now you're getting another fast rally, right? And like this is something where like it's really starting to extend quickly. The volume's accelerating, the slope is steepening, right? So instead of maybe rolling, like this is one where I might think about just locking in gains as it moves and not keep pushing strikes higher, because the slope is more parabolic. So when it does pause, it could be more of like a pullback, right? It's like a deeper retracement. Also, the implied volatility options is probably also more juiced up at the same time because the slope of the stock has also increased, right? So that's something we always talk about. So like the slope of the move, right? That's going to play into it. If it's something steady, if it's something methodical, and it seems like it's not extended, like then that might be something I want to stick with. Okay. Two other things: the overall market, right? Like that's obviously going to play into it. Like if I see something that is at getting close to my gain level or my roll level, right? And that sector is acting well and the market's acting well, well then that's going to be something I might want to stick with, right? Because I mean, there's plenty of indications that that group may continue to act well. I mean, if it's like in the financials, and the financials are keep grinding higher, and like the overall market's steady and keeps grinding, and like that's going to be something that I may want to stick with, right? If the overall market's volatile and maybe it's down and things are starting to get hit and they're showing signs of exhaustion, well then that also too, that's going to play into it, right? Because things don't happen in a vacuum. Like yeah, some stocks can behave different than the overall market, but like generally speaking, if there's going to be a significant move to the downside or a significant move to the upside, I mean that's probably going to weigh in a lot of different stocks. Okay, so like I'll factor that in. It won't be my number one decision, but I'll factor it in. Okay. The third thing is events, catalyst. Okay, and how it like impacts option pricing. So if I'm in like a swing trade, right, and it's moving in my favor, I want to roll up. One of the main things I really want to consider is like for me rolling up, like is that going to require having to hold through a possible catalyst, right? Like so if say hypothetically, and I know Citi's earnings aren't until July, but like say I wanted to roll up, but like Citi has earnings like next week, right? Like just hypothetically, I know they don't, but if they did, then that's going to play into it. Be like, oh, okay, it's been a nice trade, made some money, right? and now I know they have earnings coming up, and like, you know, maybe I say like, all right, like I don't really want to hold the earnings. Like I don't want to take the earnings risk, right? So then at that case, like I might decide like, okay, it's been a nice run. Stock has had a nice move, hit my target. I'm taking the trade and moving on because I don't want to roll up to more expensive options to like pay for that earnings report when I feel like there's a pretty good chance that I'm not going to be involved with that earnings report. All right. So again, I mean, whether it's like earnings, events, like catalysts, and how that affects the option pricing, that's also going to play in because when I roll, I want to continuously be rolling into options that are like equal to or less than the contracts that I was in. So if I'm rolling up and the contracts are like twice as expensive or three times as expensive, then that's really going to make me question whether I want to stick with it. All right. So those are the few of the reasons that, or a few of the things that I look for or kind of weigh when I'm determining whether to roll or to exit. But again, you know, each setup is different, you know, but it is nice to have some sort of process that you walk through when you're trying to figure out whether, okay, like, do I just want to book this and move on, or do I want to like try to stick with it, keep rolling, and see if this keeps like grinding and grinding and grinding, right? And that's kind of like the process I go through. All right. So, if you like this video and you're looking for more information on swing trading with options and rolling options, all the trade management with options stuff, please follow up with the link in the description of the video for more information on options to play. Hope you have a wonderful night. Stay well, and I will talk to you all tomorrow.